Hello and welcome to today's episode of the AML Clinic. Today we'll be unpacking one of the most significant areas of financial crime prevention, which is understanding source of funds, source of wealth, and the critical role of due diligence. We'll be doing this by exploring a Solicitor Disciplinary Tribunal case and the lessons it holds for compliance professionals. I'm your host, Michelle Clement, and I'm delighted to guide you through this important discussion. My guest today is Leela Chowdhury from Legal Compliance Consultants. Leela provides outsourced compliance services for law firms, and today she's wearing her AML hat. Thank you for being here, Leela.
Thank you for having me. It's nice to wear my AML hat.
You're welcome. Leela will be helping us break down the fundamentals, share her expertise, and guide us through the complexities of this case study. Before we dive in, it's worth noting that the SRA has published guidance on source of funds and source of wealth following its thematic review on the 5th of November 2025. I actually led on that review, so I'll be linking the guidance in the show notes for anyone who hasn't had a chance to read it yet. The case we'll be discussing is centered on two transactions undertaken by a firm between 2013 and 2015 for the same client. Now, given those dates, it's important to note that the allegations were brought by the SRA under the 2007 money laundering regulations. However, the issues remain highly relevant under the 2017 regulations, if not more stringent. This episode is designed to be practical, insightful, and directly relevant to anyone working in AML, compliance, or risk management. So to set the foundation for today's discussion, Leela, I think it's important that we explain a distinction that often causes confusion, but is absolutely critical to get right. Can you explain the difference between source of funds and source of wealth, please?
Well, we always have that question comes up for trainings about regarding source of funds and source of wealth. And as you said, quite a few people surprisingly don't understand that distinction. So source of funds refers to the funds that are used for that specific transaction in hand. What it is that you're going to be using for that purchase. So it could be your savings, it could be a sale of a property. So as simple as that, basically, when we talk about source of funds. So, for example, you purchase a property for £200,000 and you want to know where that £200,000 coming from. The majority of most clients is their salary that they've built up over time, and you can see the audit trail of their salary and goes into their savings. That's a simple example of source of funds. Source of wealth refers to the origin of the client's entire body of wealth. And that doesn't necessarily mean that whole wealth is going to be used for that transaction in hand. But we still need to understand the background of that client. How did they build up their overall wealth? It could be made up of their salary. They could have a trust fund. Who knows, if they're lucky enough to have a family trust fund, they could have income from that, as well as inheritance from lost grandparents. So all of that makes up. In addition, they could have a side business where they're renting property, and it could be rental income. So all of that becomes their entire body of wealth. But that does not necessarily mean all of it will be used for the source of funds for that transaction in hand. But we need to understand the background of that client. I hope that makes sense, exactly what the two distinctions are.
Absolutely does. That's a really clear explanation. Thank you. So now that we've covered the basics, let's turn to the case itself. The respondent in the case was the firm's manager, who I think we should refer to as Mr. F. It wasn't actually the firm. So I think that's important to note because that's quite unusual. And the client was the son of the Azerbaijani National Security Minister, who was the security minister until October 2015. And he was also related to the former chairman of the International Bank of Azerbaijan. That's quite a notable background, Leela. Can you help us understand why this is relevant to how the file should have been treated?
First things first, that comes out is a politically exposed person. At the end of the day, so when we talk about PEPs, we mean politically exposed persons, and that is anyone who holds or has recently held a prominent public position. Think ministers, MPs, judges, high-ranking military officials, or executive in state-owned companies. And that's where we are in relation to this matter, because he was a relative of someone who was working within a state-owned company in Azerbaijan. And so because of the influence that comes with those roles, there's a higher risk of exposure to bribery, corruption, misuse of public funds. So that's why it's important that we understand why PEPs are a red flag. And importantly, it doesn't just stop with the person who is the PEP, but it also looks at family members, known associates. So that's where that individual came in within that fold, is because he was a family member. And that's the importance of identifying the PEP, because it's not just the PEP itself, but known associates and family members.
Thank you again, a very clear explanation on why this was important to this file. Now, in relation to high-risk jurisdictions, do you have any thoughts on Azerbaijan at that time?
I think Azerbaijan was within that as a high-risk third country at that time. There was a political upheaval in Azerbaijan, and at the time there were people who were working at state-owned companies fled the country. Some even ended up in London. So that's where the concern was.
Yes, and this is an interesting fact, although the firm would not have actually had this information at the time. I've done a bit of digging, as you do, and actually Azerbaijan was at the center of what was later known as the Azerbaijani Laundromat, which was exposed in 2017. But actually, this concerned a $2.9 billion money laundering scheme where funds were channeled through European banks and shell companies to disguise their origins and influence Western politics, interestingly. So the firm would not have known that information, just to put that out there. Yeah. But what was, as you said, Azerbaijan was actually a hotbed for corruption at the time. It was known for corruption. It was known for having weak financial transparency and governance issues. So those should have also been considered, in my opinion. Okay. So with the background in mind, let's turn to the facts of transaction one that the firm handled. So facts. In 2014, the firm received 1.1 million. I've rounded these up because the figures are too long, into its client account and recorded it as funds for a new company entitled Investment. Mr. F introduced the client to an accountancy firm for tax advice and corporate structures. The firm's role was primarily administrative and essentially liaison with the accountants. Mr. F claimed that the 1.1 million was a loan from the client to one of his companies and the account that the accountants were assisting with. He claims the funds had come from the following sources, again rounded up: 4 million from company A, 555,000 from company B, and 1 million from company C. However, the supporting documents only referenced the 4 million as a debt to founder from company A. It had no mention of the client. There was no clear recipient. And also, a document was provided that was dated in 2021, which referenced a license in 2017, both of which post-dated the 2014 transaction. The second document from the client was dated January 2014 and was self-certified, claimed receipt of 6.5 million from company A, not the 4.1 that we just discussed, and referred to a £1 million payment as opposed to a £1.1 million payment. Now, Mr. F said he'd relied on general information and company A's accounts. He was told that the funds had come from dividends, and he did not verify the source of funds directly with the client. Leela. So that's how the transaction unfolded. Let's start with the elephant in the room before we move on to AML. The firm's involvement is very minimal, largely administrative. What's the problem with that from the SRE's perspective?
Well, like I said, the elephant in the room is the firm handled 1.1 million of client funds without any meaningful legal work and without understanding why the money was passing through the firm's client account. That was a big red flag. Where's the legal work? What's the justification behind it? Why are the firms using their client account for this money? So that's where we are. So
Yes, absolutely. So to put that into SRA terms, current day rule 3.3 of the SRA accounts rule 2019, but this was brought under the 2011 accounts rules, which in those days was rule 14.5. But yes, exactly as you said. So looking at the whole transaction, as I've just explained and set out, what do you see as, I mean, apart from the massive red flag you've just indicated, what are the main money laundering risks that this transaction presented?
So, like I said, lack of clear commercial rationale. I said we need to understand the reason why your client is instructing you. Why are those monies coming through to your client account? And I said nothing in the paperwork that the firm had received actually explained why the client needed to send 1.1 million to the firm. I said investment in a new company is vague. So what does that mean? There's no incorporation, no agreement, no schedule of funds, no legal objective identified. It just did not make sense to turn around and say it's actually for a new company. But where's the setup of the new company? So that's one of the things. Inconsistent and unreliable source of funds and source of wealth evidence. Like I said, didn't refer to the client, didn't have any payer or beneficiary. Again, vague information. The dates didn't align with the transaction. Already we've got dates that are post-dated the 2014 transaction. Again, inconsistencies. And they're contradicted in terms of the origin and the amounts as well. So all of those would have been massive red flags for Mr. F from the outset.
Yes.
Clearly a high risk territory that he was entering into at that point.
Absolutely. And also the fact that he was a PEP, as you mentioned, elevates the status, the self-certification. He wrote something and then signed it. So enhanced due diligence and then enhanced ongoing monitoring should have been applied. What about the fact that he said he'd relied on the accountants to provide him with this information?
So the firm shouldn't be relying on the accountants. You should be doing your own due diligence checks, independently verifying what that client is saying and not just relying on third-party statements and hearsay, basically. Just because an accountant is regulated doesn't mean that it prevents you from doing your due diligence under their money laundering regulations.
Yes, exactly. So just to break down for anyone, I'm sure we're probably preaching to the converted. Regulation 39, firms can rely in some circumstances on third parties' checks for their due diligence. However, this does not include source of funds, that's excluded. So just to make that absolutely clear that you cannot rely, as Leela just said, on a third party because they're regulated themselves.
And that question comes up all the time. Can we rely on accountants? Oh, the money's in a UK bank account. Can we rely on the bank to do the source of funds and source of debt? Those questions always.
Exactly. And my response usually to that is, well, if the bank has submitted a suspicious activity report on that client, you would have no way of knowing that. The police might be investigating that client and they're trying to see what happens with it. So you can't say, well, the bank's allowed the money to stay in the account, and so we're going to rely on it. That's always my comeback to that. Okay, so another important point, something else that comes up quite often is firms sometimes say, well, we're just doing something that's quite administrative. And that shouldn't fall in scope of the money laundering regulations. Why do formal source of funds and source of wealth checks still matter, even if you're not necessarily handling client money?
So at the end of the day, even if you're performing administrative work, the moment client money touches the client account, the moment the SRA accounts rules come into play and a legitimate legal service, there has to be an underlying legal transaction for you dealing with those client funds. You also consider the wider Proceeds of Crime Act. Are you knowingly or unknowingly risking yourself in breach of POCA? So that's another thing that you've got to consider as well. On top of that, your reputational and ethical duties that you have comes into that.
Yes, absolutely. Once you're facilitating a transaction, you're at risk of breaching the predicate money laundering offences, like you said.
Yeah.
Could you help us understand what might qualify as proper evidence of source of funds?
Like I said, we need statements. We need corporate information. So for this was a corporate entity. He was talking about transactions coming in. We need the audit trail of where that funds are coming from. We need to see proper evidence, bank statements, dividend payments, if it's loan agreements, and so forth. And all of those has to be clear audit trail. The dates need to match. It needs to make sense. Does it make sense for that corporate organisation to have those large amounts of sums? And if he's saying, oh, he's lending it from one business to the other, we still need to see that audit trail. So if there is 2 or 3 companies involved, we need to do the search in respect of all of those companies and where it's come from.
Yeah, absolutely. And you said a key thing there, it needs to make sense. So I think in this case, we could see that Mr. F did try to get some documentation. I don't think we're saying he didn't. What we're saying is the documentation that he obtained were not appropriate given the circumstances and the level of risk that the client presented.
And especially with the self-certification element, is that an independent, verifiable source of information to confirm the source of funds? Definitely not. Go on. Those days of self-certifying, goodness, no, it's unacceptable, and I can't believe you felt that was good enough to evidence source of funds.
Yeah. I don't have any more questions on transaction 1. Is there anything else that you wanted us to cover before we go on to transaction 2?
No. I think we've covered most elements in relation to transaction. The fact that he went from one transaction to the other, goodness. Well, let's go on to talk about transaction 2.
Yeah, let's move on to transaction 2. Okay, so in 2015, the firm received 1.9 million, so again rounded up, into its client account for a property purchased by a company owned by the client. The bank statement said Mohammadova, which was later identified to be the client's sister. So Mr. F initially stated that the funds had come from a loan repayment to the client from various companies. However, a document dated June 2015 from the client described the source of funds as dividends and remuneration from company A, which we cited in transaction 1, which in transaction 1 was actually cited as a loan repayment. Mr. F later suggested that the funds may have originally been intended as a gift from his sister, but were structured as a loan to company D. Now, this is the introduction of another company, was owned by the client. The documents sent by Mr. F to the SRA claim to show loan repayments, but these then conflicted with the other evidence and did not actually clarify the true source of funds. When Mr. F was interviewed by the SRA, he again admitted he had not confirmed the source of funds directly with the client. Again, he relied on the information from the accountants, and the due diligence was incomplete. There was no clear documentation on where the source of funds came from. So transaction 2 builds on similar themes to transaction 1, but also introduce a couple of new layers. So let's unpack those. What are the AML issues or money laundering issues in this transaction?
Oh my God. I'm going to say it amplifies the red flag from the first transaction. So the headline issue is a complete lack of credible, consistent explanation for where those nearly 2 million actually come from. So every version of events contradicts the first. So these are the ones that I noted. First, it was a loan repayment from several companies. Then we got dividends and remuneration from company A. We also got suggested it might actually intended as a gift from the sister. So we've got the sister element there. And then finally, it was said to be structured as a loan, yet from another entity, company D. So when those explanations keep changing, and so that it's a classic money laundering red flag. It tells you that the firm never verified the client's story and did not understand the transaction. It was basically facilitating money laundering. Clear case when there's so many inconsistent explanations without adequate evidence of that. There's a second red flag is funds arriving from a third party. Here, the sister, without proper justification or documentation. He's just relying on his word. Again, nearly 2 million from someone who isn't, your client. Again, involving another company owned by client D with no documented relationship or rationale. Again, the issue here is that the Mr. F again relied on unverified information from his client.
Yeah,
key red
absolutely.
flag there.
Absolutely. We've mentioned a couple of times that enhanced due diligence should have applied. What do
Yeah,
we mean when we say enhanced due diligence? What should he have done? So I know this was brought under the 2007
yeah.
regulations, but let's assume in modern day times this needs to come under the 2017 regulations. What does enhanced due diligence, what should that look like?
Like we said, the moment it's been identified that he's a family member of a politically exposed person, enhanced due diligence applies. So if your firm has a business relationship with a PEP or known associate or family member, you need to have senior management approval to establish or continue a relationship. Then you got, as with the money laundering regulation says, take adequate measures to establish source of wealth and source of funds involved in the transaction. So that requires you to conduct enhanced due diligence and look at that as an ongoing monitoring of that transaction. Yeah, so these are the things that requires as part of enhanced due diligence. But can we evidence that Mr. F has done that? Based on the facts in front of us, no.
Yes, absolutely. Regulation 33 is circumstances when you must apply enhanced due diligence,
Yeah.
which does reference PEPs. And Regulation 35 is when it tells you what you must do when you're dealing with a PEP. So both of them do apply. But again, 100% agree with you. Enhanced due diligence must have been carried out, but the regulations are not prescriptive. It doesn't tell you, except when you're dealing with PEPs. And as you just mentioned everything there, or if you're dealing with a high risk country as well. So those are prescriptive, but actually it says you should do more checks, which again
So
is
what
not
when
so
people say,
helpful.
what does enhanced due diligence look like? Again, it's not prescriptive. You got to look at the risk of that transaction and get as much information as possible about the client, the nature and purpose of the transaction, the source of funds and source of wealth being used. So it's doing more than what you would do in a start of standard due diligence. It's not enough just to rely on what you've got in front of you. Did that bit more.
Yeah, there's an element of, dare I say, common sense. Whatever the risk is, there's a higher risk. Well, why is there a
Yes.
higher risk? And whatever that risk is, well, you want to drill down to that specific point to make sure that those funds are not proceeds of crime, or whatever the risk is, that you can mitigate it effectively.
Yeah.
I don't have any more questions on transaction 2 because they were quite similar to transaction 1. Do you have any other points that you'd like to raise?
Like I said, when we're looking at source of funds and source of wealth, especially for enhanced due diligence, trying, as you said, bank statement, confirm exactly the audit trail. You want to see, especially where someone has come up with inconsistent explanations. For each one of them, you need to have explored that and have that evidence. So it would there already highlight to you, wait a minute, 1 minute he's saying it's coming from his sister. We've got nothing to evidence that. Next he's saying it's coming from dividends. Have you got that? The dividend mandate, the board approval, all of that would support that evidence.
Yes. Yeah, absolutely. So those are the 2 transactions. As we said, the findings were against Mr. F. Could you explain to our audience what the decision of the SDT was in this case, please, Leela?
Well, it turned out that he was fined 32,500. That he was fined personally. And then we've also said that he cannot practice as a sole practitioner or sole manager of an authorised or recognised body. He also, for a period of 5 years, cannot undertake the role of a HOLP or HOFA if it's an authorised body, recognised body, a COLP or COFA. In addition, he could not hold the role of MLRO and MLCO. And finally, he could not be a signatory of a client account. So basically, he can never touch a client account again or make any compliance or money laundering decisions. That's how serious they found in relation to this Mr. F.
Yes, really serious stuff. Just to say, there was another finding which we haven't actually discussed, and that was that Mr. F was using the client account as a banking facility for his own personal payments. So we haven't addressed.
Yes, we did touch on that. Yes, we did touch on that. We focused on the transactions in relation to this PEP.
Yes, so I mean, that's something completely different. But these findings, so he was found to have been in breach of, so this is in relation to the 2011 principles Principle 6, which relates to behaving in a way that maintains trust in the public. So his actions were found not to have been behaving in that way. Principle 7 was in relation to complying with regulatory obligations in an open, timely, and cooperative manner. So we don't know what that is about. Principle 8 was in relation to having sound financial and risk management principles. So again, he was in breach of that. And then outcome 7.5 of the 2011 Code of Conduct, which is in relation to complying with the AML legislation, which, as we've discussed, he clearly did not do that. So, key quote from the decision was that Mr. F had prioritized the transaction over his regulatory obligations. The steps taken were rudimentary, piecemeal, and naive. So, cautionary tale to anybody who's dealing with a transaction involving a pet, or even if not involving a pet. Any final thoughts, Leela, on this case?
Well, the key issue here is his misunderstanding of the AML regulations. He did not understand his role, what he was required to do, and how to implement it in practice. A lot of it seems from his lack of knowledge, which is no excuse for holding those significant roles of MLRO, MLCO within that firm. And that's the importance in relation to this, is that lack of knowledge and understanding of basically the SRA accounts rules in terms of operating a client account, making sure that you do not use it as a banking facility, and further his obligations in relation to money laundering, understanding what a PEP is, enhanced due diligence. All of that is a lack of understanding what appears to be the case. And again, definitely no excuse, especially if you're holding those such important roles.
Absolutely. Thank you, Leela. So I think that's it. We've come to the end of the episode. So huge thank you to you for sharing your insight and your expertise.
Thank you.
You're welcome. If you are a solicitor, compliance officer, or anyone working in legal risk, I hope today's discussion has given you something practical to take back to your firm. And if you found the episode useful, consider subscribing, sharing it with your colleagues who live in a world of nuance, risk, and razor-thin judgment calls. And if you've got a topic that you would like me to cover, I'd love to hear from you. Thanks for listening to the AML Clinic. Until next time, stay informed and stay compliant.
Thank you.